Hello, everyone. Welcome back to a new session of Decoding Market. Welcome back, sir.
Pleasure to be back.
So it's the midweek as we see, 3 days in the week and 2 days to go. How was the performance and what can be the market move in the next 2 days? Up, down, sideways,
So
anyways.
two days is a very short time period, but if we started a recovery, we do have some signs of an initial impulse from the bottom today. So definitely the rise is not over. That much we can say, and we should hope for it to continue to test that 25,000 gap area. I think that is going to be the key for further move. Is the next level very short term is to get past 25,000. Uh, it's around 61% of the 3 days of fall. And once we cross that, 10, 25, 25, 6, or 25, 6, 25, 260, somewhere there is going to be the next resistance. So those are the things we'll be watching for. But yeah, last 2 days movement means that this bounce, whatever it is not over yet, is what I think. There is some more near term upside. But it's slow so far. Uh, Not yet the broad market, because today mid cap, small cap, and bank Nifty, all three are down. So that is not helping. So we do need the broad market also to pick up a bit. That is usually where the strength comes from. Uh,
So, as we go forward, you said that the strength come from the broader market. Could you just specify that a bit?
yeah, so we call this a stock market, right? So stocks have to go up.
Right.
Index is a bunch of large caps. Of course, if you're purely talking Nifty, you need the large caps to go up. But the broad market does sort of signal the internal strength of the market. So if the broad market, that is mid caps, large caps, go up, so which means if your advanced decline ratio turns positive, it is healthy that this move is not driven by only a few stocks or sectors, but driven by an overall improvement in the market. So that is why seeing the broad market improve helps.
So, moving to today's session's first question, how do you identify when market momentum is truly changing versus when it's just short-term sector rotation?
So I think it does require you to look at the setup on multiple time frames. That means daily, weekly, monthly, because where is this turn coming from? Is it coming from an important higher level support, or is it just coming from somewhere in between? Is it coming from a key retracement like 61.8%, versus it's coming at 38.2%? Okay, so if you're turning from an important level, the odds of your reading on the momentum going right are higher. And if you still want to add further masala, then you have to add sentiment indicators in the whole concoction. That is the only way to know whether this buy signal is going to be better than the last one. If sentiment is also aligned to an extreme before the turn, which means before a buy signal you got oversold conditions on your sentiment indicator, or before a sell signal you got overbought conditions on your sentiment indicator, that definitely helps. And again, within sentiment also you have short term, medium term indicators. So if the short term and medium term both are oversold, I have an even better situation to put it together, so the next buy signal can be even stronger. So that's the two three things. So there's multi time frame analysis of the indicator and multi time frame analysis of the sentiment, and you mix it all up, make a pina colada and drink it.
Nice one, sir. So, it's like moving to this. Let's talk about the second question. How can retail traders avoid false signals with momentum scanners like RMI, especially on shorter time frames?
No, very difficult. The shorter the time frame you go, the harder it's going to be. We usually use sentiment up to the daily time frame. So up to that time frame, it is still short term, meaning a couple of days. If somebody says intraday, then I really have to test. We are trying to test our daily swing indicator that we've been proposing and using for more than a decade now internally and we're trying to run it on different time frames because thanks to technology we can make it live on everything from hourly, daily, weekly, monthly, and it's already in test. We want to see whether on hourly. I have not really looked at the final data, but if it works on that time frame, then maybe it can help very short term intraday traders as well. But I want to see it before I can confirm that.
So mixing this with that pina colada, and if this tastes like profit, then it's very good because the taste of profit everyone likes.
And but it takes some learning because every indicator has its learning curve of how it works relative to the market and how you should use it. We sort of got a fix on the daily one because we were doing it for the longest period of time. On other time frames, it will take us a while to get the same. And for anybody, it will take a while to understand. Oh, if this happens, then this is what you should do or not do.
So moving to the next question, how does India Chart's mentorship program helps the retail traders to gain an edge? And what are the specific things that will improvise their trading and investing journeys?
So here's the thing: for more than a decade, decade is long, not a decade. Say 1991 to 1999, so that's almost 8 years. While I was learning technical analysis, and 94 on when I was working and applying it professionally, uh, I used only classical technical analysis, not Elliott wave analysis. And if you're only using, say, some technical indicators, a single technical indicator usually doesn't have a accuracy ratio of greater than 50%. And it all boils down to whether your wins are greater than your losses and so on. And even then, sometimes there's a lag in the indication. So how do we do away with the lags, okay, and how do we ensure that our success ratio in terms of number of winning trades exceeds the number of losing trades? These are the two things that you want to achieve. Now, for speeding it up, first step I ended up designing my own momentum indicator. So now we have RMI that's faster than the MACD, but it still doesn't mean that you get in at the bottom, right? An indicator is always with a lag. You can look at the trade setup. If you like the trade setup, you wait for the indicator to give you a signal, and you take that signal. But if you want to have an anticipatory notion of where markets are headed, what is the risk reward, uh, and thus improve your performance, that means even know when the indicators are likely to falter more. The question you asked me in the beginning actually has some intercorrelation here, that we can even use Elliott waves, and I didn't add that as an answer because in general I believe people who see Elliott wave analysis requires a little additional work. It's not as simple as opening strike and looking at the indicator. Sentiment indicators have made that easy for people who aren't able to practice wave analysis. They simply use sentiment. But if you're really trying to judge that, okay, this buy signal might go false and this buy signal might not, and wave analysis is the filtration that will allow us, because it takes an overall view of the market, and then once you've taken an overall view, you will ignore certain signals which are against the trend, one, and also if they're favoring the trend and they don't fit the trade setup, those also, or if they are just counter trend in nature, those. So there are a couple of signals that you will sort of put aside, and that then increases your performance, because then you're avoiding the bad moves that usually cause more negative trades to come in. So it's the only forecasting tool, I think, and that becomes an important part of mentorship, because I don't think anyone else trains the way I do on how to actually mark counts. How do you not make it subjective? How do you make it objective? I think that is the thing that people struggle with, and we sort of nailed that aspect of it. But that is not all, because this is not your routine one day program. It's a lifetime, uh, what should I say, not just access, but it's lifetime journey that you take on, and which starts with the learning part first, which means you learn basics of technicals, then you learn Elliott wave analysis, and then in level 3 what I get into is how do you all put all of this together in position sizing, trade execution, entry, exit, correct way of doing it, maximizing your gains in the trade. Understanding this even for investors, not just for traders. So investors, how do you combine Elliott wave analysis with you know value investing, and so on and so forth. uh, Covers all the gray areas. You sort of get a fully rounded understanding of how you need to uh, apply the entire science to the market, and a lot of nuances which I've experienced, I'm able to share over these sessions, each session being 3 hours on a Sunday morning, 9 o'clock to 12 o'clock. I've sort of, I think, given people the entire pitch of what we do, and it lasts for more than 3 months, usually 3.5 months at the minimum. We say 3 months when we are selling it, but we have never done a session that ends in 3 months. Even the first round, which was offline, ended up going just over 3 months and two sessions. And after that, everyone has gone beyond 3 months. So that's just a thing, that 3 months, and it actually becomes four. Sometimes because yes, we take breaks, but also because I have a lot of topics to cover, and I want to make sure that everybody understands it. And even after we are done and dusted with the education, you can attend the next mentorship program and the next one and the next one for the rest of your life without paying a dime. So I've sort of given the entire pitch now. And then we do the offsite, right? You still feel, no, you want to really meet up and learn one on one and sit in a class. Last year we did that in Jaipur, 5 days and 6 nights. Prior to that, Goa twice. Prior to that, Lonavala. This year we are thinking somewhere either Kochi or uh, let's see, someplace. Maybe in the outskirts of Bangalore if there's a good resort. I suggested Pondicherry, but again, it's all about question of how easy it is to travel also for people to get there, because it should be straight. If you have to
Right.
take multiple routes to get there, then it's a little painful. And we choose an holiday weekend so that you don't have to take so much leave from your work. Uh, this time it's looking like around the 2nd of October holidays, where you have the Sera and everything coming together. That's a good period we are trying to fix on. Uh, so yeah, so much gyan to happen, and that also you can attend every year. We और क्या चाहिए
And that too lifetime access for everyone. Once
for
you get in,
everything,
you have the lifetime access.
and you
Yes.
join, and then you join. Once you complete all 3 levels, you join our inner circle WhatsApp group, only for people who've completed all 3 levels, and get access to RMI on TradingView real time.
Right, sir. So, just a question that came up in my mind, that people are very much inclined towards कि आज मुझे किसी से टिप मिली that this stock would shot up in the coming few months. This is a very normalized thing that we come to hear from people. लाइक यार ये स्टॉक बता दो कैसा है, ये स्टॉक बता दो कैसा है, ये इन्वेस्टमेंट बता दो कैसा है. एंड दिस इज अ वेरी नॉर्मलाइज्ड थिंग दैट वी हियर ऑन अ डे टू डे बेसिस फ्रॉम एवरीवन. Why everyone is inclined towards tips rather than taking their own time to study? Like, what is the bifurcation? Like, why is there such a gap? Always you always try to declutter the noise. Always you try to make people teach that, yeah, do your own analysis, believe on yourself, believe on your numbers rather than expecting results from others. But still, there is the same round circle revolving round and round, people making losses on the tips that they got, and this is happening still now.
So
So
there are good reasons and bad reasons. The good reasons are that people are working, they have a full-time job, they don't have time to look at the market, in which case they should not trade, but they may look for tips for investing. Okay. But investors can spend time on the weekend, but then they may say that I have family time, other errands, big family, small kids, endless reasons you can come up with for not doing it yourself. And some of them may sound genuine. So for that crowd, I can't complain too much that there are people who want good advice or good research to be able to do justice to their finances, and so that's a need that exists. People are doing other things, and therefore they want an input. But there's also a crowd of people who are active in markets and still want tips. Now, their definition of tips is very different. When they say tips, they actually want inside information. And that has led to the development of an entire fraternity of salespeople in the broking industry who supposedly will tell them something that nobody else knows. But as the industry has grown, the amount of noise in that has also increased. Not everybody can know everybody. In the old days, there were at least some people who are supposedly the senior sales guys who are well connected, had some idea of what is happening. Today, that is a lost case, and so everybody is just dependent on their internal research. So even the sales people are giving out research, whether they tell you it's a tip or not. But the largest, explanation of tip is that if the big guy is buying something, so if you come to know that XYZ investor is buying something, and it's reported now every month by the exchanges in the shareholding reports and all, if there is any big investor buying or selling something, then people want to track that and participate in the stocks that they are buying. And similarly, if funds are accumulating a certain stock, you want to participate in that. So that makes your life easier, right? You don't have to do the research. Somebody else has done it, and if he's buying, then I might as well buy. Okay.
right.
But as we find in behavioral finance, that people do maximum justice to something when they believe in it. So when you're simply following someone else, sometimes your belief is not so strong, and you might not commit to the fullest extent, okay, that you should in a good investment deal. And therefore doing some research of your own and or understanding some dynamics of market research are a good thing, because then you'll be able to verify that what you're hearing is real, and you need to participate. And also that you'll have a plan, because see, somebody XYZ calls me up also and tells me, Rohit, ye bahut acha lag raha hai, and I look at the chart, at least I know, looking at the chart, how to exit. Now if I don't know how to exit, chances are I will actually get stuck in something that somebody recommended me. So the art and science of entry and exit, even if you're following tips, I think is important. And in the process, you end up learning one thing in behavioral finance, which is the ability to take decisions, which is very tough for some people. कि मैंने ये ले लिया, अब मैं बेचूं कैसे? They can't get to move. They can't get themselves to take action. Very important learning also, that if you don't take action, then you're asking for trouble. But that action has to be based on a methodology. So sometimes people can't take action because a methodology doesn't exist in their head. That how are they supposed to do this, or is it logical? If they follow this, then what next? If I get out of this, how do I re-enter? And if you do have a methodology to re-entry, then exit and re-entry can become a process and doesn't really scare you anymore. So I say that there should be some learning, even if you're following tips or inputs. But as I tried to broadly explain, there is a need. There is a need. That is why an entire industry exists around giving advice or giving research. People do need inputs to get started. People don't have the time to do in-depth research. Those who do can do it on weekends if they put in some time, especially investors. Traders, of course, need to be full-time. There I cannot say that you have the time if you're working elsewhere. But investors can put in some time over the weekend if they build certain simple scanners and processes to execute and define ki, okay, these are the type of stocks I will buy. And we are making that possible on Strike with layering one after the other each type of scan. The work is still in progress. I'm not saying all of it is there. We have some of it, the technical fundamental stuff. We are further layering to be able to scan it, then combine scan it, and be able to have a ready-made results based on certain underlying logic. And I think, but it can be done manually as of now if somebody puts their mind to it. So yeah, I think that's a long answer to your short question.
No, it was an in-depth answer to the question because it was just the tip of the iceberg, and you just recovered the entire iceberg in front of us. That these were the pointers. This is not exactly like, it's not always like we always say the grass is always greener on the other side, but that's not true. So that's what you like told us the entire story. So yes, sir.
Yeah.
So that's it for today's conversation. Let's get moving with the questions. So moving to the first question, sir. Uh,
What's your view on time analysis? Elliott wave sometimes becomes a big weight game. So no one has been able to perfect time, and when people get lost with time, they start looking at astrology. I have not found the answer in any astro analysis that really solves it, but you can go your own way. Usually people who don't understand Elliott waves choose astrology. They say ये नहीं समझ में आ रहा है तो यही कर लेते हैं. But that's not the answer either. So time analysis, see, as far as if you're doing time on a for seasonal kind of study, or oh, most corrections are recently taking only 3 weeks, so they may take 3 weeks. Those are normal type of good time analysis. But the kind of time analysis that says that every 4 years the market tops, every 2 years this happens, or exactly in this month aisa hoga because of some Saturn Neptune rotation. No, I haven't seen that accurately work. There's no proof of that working. You'll not find it on an Excel sheet that this event happened, therefore this is how the market moved, and this event happened, and therefore this is how it moved. At least when we put out calls based on whatever our knowledge is for 20 years, every analyst who's worked with me professionally, we had Excel sheets. I have Excel sheets of all of them with average win, average loss, percentage right, wrong, etc. If you're not monitoring, then you really don't know whether your system works. So that is what I have to say as far as some of the astro stuff is concerned, but or time stuff is concerned. So time can be misleading. So again, now to say, see, there is not that. Now let me not say. Let me also go to the positive side. Let's not say that it has no role. I have seen markets move after time cycles or moon cycles and things like that. So again, I'm not disregarding it that way. But I'll tell you what the problem is. The problem is that if something looks too easy as a solution, we make that our ultimate bias. And then it is a problem. So for example, if I make my ultimate bias, the market is going to fall. And then I will find every time analysis to choose that, yeah, on this day it's going to happen, on that day it's going to happen. And it actually will not happen on those days. Okay. And therefore, what is the first overlay? That is the critical question here. The first overlay cannot be time. Okay, time can be the nth overlay. Okay, it cannot be the first overlay, and therefore it should not become a biasing factor. So if I say prices are going to go up by $20, but if I add time to it, I say they will go up by $20 in 12 days, and it will top out exactly on the 8th of August. That is likely to go wrong more than right. But if I simply say something is going to go up by $20 with a risk of 4 rupees on the downside, chances are, if I've combined Elliott wave, momentum, sentiment, even these three, I can be accurate 70% of the time. That doesn't mean I'll not have one bad month where I'll be wrong more than half the time. Like I could be right only 30% of the time for 1 month. But on a 12-month basis, okay, I will still be more right than wrong. So you'll have bad months, but you'll still be good on a year basis. You'll have many good months, more good months than bad months, and so on and so forth. You'll still have a bad year. All that is going to be part and parcel. So I'm not giving that as the solution, but at least you'll be better off is the solution. But if you add time to it, the chances are you might still go back to 50% or less, simply because time becomes a biasing factor. It stops focusing on that, the idea that you can go up by $20 to that I can know exactly when it will happen, and that will cause a problem.
Right. So, moving to the next question, that is from Value Trades.
My artistic understanding telling me markets are close to about to close at 24,500 this month expiry, but technical it's a sideways expiry. So he's saying basically tomorrow it's going to close at 24,500. And he's
It's quite
using
a
art to do that. Uh,
artistic
I
way.
also like art. I also like art. There's a lot of messy art back there. But
So, to the next question. It's better to this is speculative.
yeah.
That is from
Now, see, for this, like, this is an entire session. So I don't know if I can go into 4 5 steps here. That's another half an hour, 1 hour. But we've done a lot of 1 hour webinars. Recordings are on YouTube. We have, if you're using Strike, there are many recordings in the help section. There's so much material out there that I don't know whether there's anything new that I can add to what has already been done in terms of using, RMI and Strike. Or does he mean only RMI on Strike? So, see, the simplest thing that you do is two time frame combination. The reason we've given the filters on top, and we'll probably add hourly, is that at least you combine two time frames. So let's say if you're a short term trader, so if he mentioned he's a short term, I could have put it in that time frame. But let's say short term meaning 5 to 10 days. Then you use I think daily and hourly combination. Okay, that works for 4 to 5 days, sometimes a little more. If you use a daily and hourly combination of RMI, which means that if the higher time frame is bullish and you trade only the lower time frame signals, the chances are you will have more accuracy. And similarly, if you're a positional trader, use the weekly daily combination. So you look at all the buy signals on the daily when the weekly is also positive, and if you execute those, chances are you'll have many winning signals there also. So that is sort of what you do, and the filtration there allows you to do it simply by checking the filter on top. I don't know if I should show
moving
it.
to the next question. Okay, sir.
So very quickly, because I'm just talking. Okay, you go to the scanner. Okay, so this is a scanner. You choose an index. If you're trading, long and short, then choose the FNO basket. So you do away with this index. Okay, if you're doing daily, hourly, in the daily you choose uncheck, then choose buy and new buy signals, and on the hourly only new buy signals. So this means that stocks that are bullish on the daily but are giving a fresh signal on the hourly. Now there's no setup in this particular closing, but there were two signals in the previous hour. Previous hour meaning at 2:30. Okay, that's why I moved to last candle. Last candle meaning previous hour. So if we simply go to, so there are two here showing up, and this is the kind of scan you would do, and then you can actually open each chart and check whether that particular chart, what it's showing you, okay, on the daily hourly setup by clicking on daily and hourly, and see which one you think you can get a good risk reward. Okay, now how to do that is an additional thing, but this is the basic scan. You're using a two time frame scan like this. You can do it for long or short, any two time frame, either use daily, weekly. If you have a higher time frame, which is like 1 to 2 month, 3 month. But if it's 5 days to 10 days, then you use the daily, hourly. So that's the simple explanation. Next question.
So next is from value
How
trades.
much do you consider as percentage trading as an art versus trading as technical? So, like with every science, if I have to define, you go to sit in an economics class, they say yes, economics is an art and a science and a whatever. So it's the same definition for everything in life. Technical analysis is an art and a science. Now, if you wants to put a percentage on it, I don't know how to put a percentage on it, but it is both. When something becomes an art, I'll tell you, when you master it, when you spend time mastering it, then you become an artist. When you don't spend time mastering it, then you're a scientist. You're just looking at buy signal aaya, sell signal aaya, buy signal aaya, sell signal aaya. Then you go to what I have shown just now, combination of daily hourly. Then you go to, oh, let's add sentiment to it. Okay, can I analyze four things and come to an answer with a probabilistic outcome that I'm going to be right or wrong? Now you're an artist. Okay. And then can you do all of that in 10 minutes and take a decision between 3:15 and 3:30? Now you're really an artist, because unless you have mastered the system, you won't be able to take that decision in 10 minutes. And like a breeze, like, it's just your daily process, like drinking water. So it is an art once you master the science.
So moving to the next question.
Sentiment versus diffusion, it will come 1 hour time frame in future. Sentiment, some of them, yes, like the swing, we are moving to hourly time frame. We have already tested it. Testing is going on. If we are lucky, it will be released by this weekend. Diffusion doesn't have, no, I don't, we haven't thought of going diffusion to that time frame. Diffusion is something we run on mostly on daily time frame, because it's a daily check of whether stock is above, below moving average. I know it can be rushed on to weekly and hourly also, but maybe we'll consider it next round. It's not in the current release. Current release, I think we've only thought of moving swing to multi time frame, not diffusion.
So moving to the next question from Rajdeep.
Say something on Nestle. But yeah, stock specific questions we cannot answer.
Okay. Uh, the next one is not a question, it's sort of a comment first. So it was in response to the conversation of us, what we were having, the fake tips and newses. So,
Well, using strike, I have great. I guess he means got. I've gotten very good results,
yes,
and I have stopped watching news and fake tips. That's brilliant. That's just brilliant, because I've seen sometimes that news happens and then the swing gets oversold. It sort of happens at the same time. So a little bit of patience with the RMI and sentiment setup, you can discount news quickly. So, and definitely don't need tips on, especially on where indices are headed. So yeah, great. Really, really happy to hear that, Pradeep.
so that's it for today's session. So stay tuned for the next one on Friday, same time. Meet you guys and stay tuned. Trade safe with Strike and also join the mentorship of India Charts to get anything you want from the market. You can actually get everything you want from the market. Just join the mentorship program. Thank
I
you,
think they're
everyone.
running. I think they're
Thank
running
you,
some.
everyone.
I think they're running some special offer on the mentorship. I saw some email today.
Yes, yes.
So you should probably just call the team and ask.
Visit on www.indiacharts.com and you will get the number over there. Contact our team. The team will reach out to you for the best deals. Thank you.
Thank
Thank you,
you.
everyone. Thank you, sir.